Hi everybody, it's Wednesday the 29th of June over here in the Asia Pacific area and Tuesday the 28th of June for our friends across in the US. This is a very, very important call that we're about to run, and I'm super excited to have the team from Connect Books with us. We have Nachman and his team, and they're going to be talking to us about why, as a private label seller, you need accrual-based accounting. As well as lots of tips on how to manage that process. So Connect Books allows you to sync your Amazon data and other data to your accounting software. And I think this is one of those areas that as sellers, we tend to put off managing the admin side of things, but it's super, super important for us to make sure that we're on top of this and have everything in order. So I'm very, very excited to introduce Nachman and his team. Thank you very much for joining us today.
Hi, and thank you so much for having me today. And I really appreciate the honor of getting this time to really present for Amazon sellers why they need to have good books, and particularly a lot to focus in why they need accrual basis accounting.
Yeah, awesome. That's perfect. I understand you got some slides as well that you're going to run through, and we can take some questions as well. So if you guys have any questions, feel free to either post them in the chat, because Nachman's team is also here. We can help respond to those questions, or if you want to ask questions, raise your hand and we can run through questions at the end as well. So I will hand over to you. Thank you.
All right. Okay, so all right, can you guys see my screen?
Oh, we can, yeah, it's perfect.
All right, perfect. All right, so we're gonna start off today with why do private label sellers, why do they need accrual-based accounting, and why is it so important for your business to know all this?
Just while you're doing that, is it worth just having your team introduce themselves quickly? Is it worth running?
Sure.
Running through?
I'm gonna get it. Yeah.
Oh, awesome.
I just gotta get this back up here. All right, so I would like to introduce our team. We have Yehuda here. Yehuda, you're here. Get your camera on. Yehuda is our CMO, helps us out with all the marketing aspects, and will be helping us he has been a lot involved in helping us prepare this presentation and getting everything properly. He will be in the chat, happy to answer any questions and help along. We also have along on our team is Sam. Sam is from the sales department, and he constantly talks every day to new customers. Any question, anything that comes up, he's always available to answer. So just feel free to send any message in the chat, and we'll do our best. All right, so as we begin, we will start off explaining what makes ConnectBooks unique. So there are many other softwares out there. These are other accounting softwares. There's a lot going out there. What makes our software, ConnectBooks, unique? Now, in ConnectBooks, what it makes unique is that the next part about the software is that our software was built by accountants. It's very rare to find softwares built by accountants. I would say most of the time you have a software where you have like a programmer who decided to make some, comes up with some good idea, some cool software, and, that's where they begin. This program and this course will also be focused, we're focusing on the accounting aspect, and we want to make sure you have good books, which puts the software in a very unique spot because it was built by accountants, not just like some programmer decided, let's build out some cool software. It's actually accountants who understand accounting, and all day is what we sit and spend is crunch numbers. These are the type of people that are busy building and enhancing and keeping adding on new features to our software. So I give a bit of background on myself as we dive in. I graduated from FDU with a master's degree in accounting. And after graduating school, I was working as a CFO for a wholesale kitchen company. And they were carrying at that point over 25,000 different SKUs. And that part is where I got a lot to focus and work on inventory, which is the same as in every Amazon business. You always want to make sure, like, for example, in an inventory company, you want to make sure, meaning in any Amazon business, you're dealing with inventory and you want to make sure you're properly reporting everything the right way. And that's where I gained a lot of experience in terms of dealing with inventory and in terms of understanding the value, making sure it's properly booked and having the books done the right way. In 2017 is when I started my own bookkeeping company. So after I finished school and I worked for a little while as a CFO, I decided to start a bookkeeping company. And that was in the beginning of 2017. Once I started, 6 months into the process of my bookkeeping company is where I started to work with Amazon sellers. And I had at that point, it started off where I had like a private label seller who was actually looking to split up with his partner. And they approached me and they were like, we're splitting, we want to part ways. If I can, give them books because one partner will be buying out the other partners. So at that point, I was faced with a pretty difficult task. I needed to know, they wanted to know exactly their profit margins on every single product. And they wanted to know exactly what's going on. So that's where I started to work on them. And the hard part was they were private label and the partner wasn't a part of every product. So it wasn't like I was able to say, okay, let's take the business and let's do 50-50. Who cares what happened? It just like it was 10 products and he was only a partner in 3 of them. So they need to know how much each product made. And then from those 3, we actually, he got his, his buyout, whatever they agreed upon. So my job was to, take this Amazon account, split up the profits per product, plus split up all the overhead. We need to take the overhead and actually allocate it because, it wasn't fair that no overhead shouldn't have been allocated to any of those products. So that's where I was part, and that's where I started to work. That's where I got really brought into the Amazon field. So I worked in that company for a while. And I built different type of spreadsheets and we imported everything to QuickBooks. After everything was imported to QuickBooks, I approached a programmer and I told him, I'm looking to expand my bookkeeping company. So how about you take all these spreadsheets that I built and let's try to automate it into some sort of a software. So that's really where ConnectBooks, that's really where I started into the software process. I originally did not build a program to sell. We built it just for our end and so we can expand our bookkeeping services. Started speaking to some sellers and they said, we're doing the bookkeeping in-house and this is a software that we're looking for and we want to use this, could we, we would want to use the software, but we're not really looking for the bookkeeping service. So at that point, I went on to the next thing and, that's really where ConnectBooks was born. So that's when we took a 360 and we took the software and we said, hey, we have a product here that a lot of Amazon sellers want, not just our bookkeeping. And let's, build this into another product that we can sell. We can sell it. I'd say to date, we are a team of 10. We have set up over 1,000 Amazon sellers with clear books, meaning not just about setting up books means entering transactions. We actually set them up. They know what's going on. And we set up today, and we also have processed over $8 billion in transactions that we've pulled from Amazon and the other marketplaces as well. So this is just a little background about Connect Books, what makes it unique and our experience and how we got to where we are today. And now we'll actually start going more into the bookkeeping aspect. So in the next part, we're going to be discussing anything you need to know about in bookkeeping. So as we begin to discuss more about the bookkeeping, I'll have a framework here that I prepared, which I call the 4 quarters of profits. So we got a square, and we have 4 different objects which we'll be covering tonight. And in this part, we tried to give it some names. So we give a name like the 4 quarters, 4 different aspects of profit. And this is really what every Amazon seller should know. And this is what we'll be covering. So first thing is, how much money are you making? And that's true, like really, how much money are you making? It's not just what you think. It's actually having it in pen and paper, really understanding what's going on. The next thing what we're covering is also, how much is your business worth? So today, that's a very popular question. And what says under is EBITDA. EBITDA is for earnings before interest and depreciation and amortization. It's used a lot by accountants, and it's also used a lot for when you want to sell your Amazon business. So if anybody here, is in the process or is looking to sell their Amazon business, one of the things they would want to do when they want to sell a brand is they want to know your EBITDA. And that's where it starts. Of course, there's other stuff to do, and you can also add back certain expenses, other stuff. But in general, you want to have a concept and know what your business is worth these days in order, you should be able to sell it and get a good deal. And then the $1 million question is, where to begin? Where do you begin? We have invoices in the emails, we have stuff piled up, we have stuff all over. Like, how do we even go about this? How do we even start? How do we get this all done? And the last but not least is, after all this, is how to put this in autopilot. And we'll begin in the course, we'll begin explaining more, we'll cover the first 2 or 3 topics more. And, how much money are you making, how to actually, and how to evaluate your business and know what's going on. Towards the end, the last thing what we'll do is, after explaining all that to you, we'll show you how to put this in autopilot. And autopilots I simply mean with taking 20 hours of work at a minimum a month and putting this into 5 to 10 minutes. That's really of getting all this and putting this all on autopilot. All right, so we'll start off with the first thing. One of the first things you want to see in your business. And this is a common mistake that I've seen a lot of times people make in their company, is you want to have a true profit and loss. Now, what do you mean by having a true profit and loss? So I actually had a story with one of my customers, is that I was working with them, hands-on on the bookkeeping also, we're helping them out. And I went over the P&L at the end of the month, and it was showing that they made $100,000 profit. I don't know if it was exact 195, but that range. Now, I knew it didn't make sense for one simple reason, because the bank account maybe had $1,000. So, I was like, what's going on here? like, how does this even begin to make sense? Like, if they really made 100,000, meaning after payroll, after all red, after everything, then why is there no money in the bank? And I started digging through the profit and loss, and they were also not just selling on Amazon. They were selling to a lot of box stores, chain stores. They were selling all over. They've been in business already for like 10 years, and Amazon was just like another alley, another stream of income. So after going through the books and digging on a deeper level, is I noticed what they did is they were sending out an FBA shipment to Amazon. So they were sending out a pallet, and they decided that this pallet that they're shipping out now is they wanted it off their books. They meant well. So they had a pallet of goods, and the goods were like, let's say it would cost them, let's say, I know, between 50 or 60. And they decided that they were gonna, so the way they worked is that they have one person who was in charge of Amazon. And now that we're sending out a pallet of goods, let's create an invoice in QuickBooks. So let's take all the inventory off our books and let's record the sale. And then eventually when the money comes in, we'll take the money that comes in from Amazon and apply it to those invoices. So what ended up happening when they did that? What ended up happening was that they created the sale in QuickBooks. So now QuickBooks is showing profit. And they were sending like $50,000, $60,000 worth of goods to Amazon. And they did that on like a 50% markup or more. Like I think a 50%. And they were claiming that really they have 100% markup. But for Amazon, they'll do a 50% markup. So let's say the number was $50,000. They did, cost of goods sold. They took out additional 75,000, and they took that 50,000 to a 50% markup was 25,000. So total sale was $75,000. Now I told them, first of all, it doesn't make sense. Why doesn't it make sense? Because the inventory is still yours. You cannot record a sale in your books, even if you're sending out an FBA shipment. It's not like you sold it to Amazon. If you're doing, let's say, Vendor Central, where you're actually selling the goods to Amazon, which very little people do today, that will be a different story. But we're discussing your Seller Central. I understand that you're making an FBA shipment, and I understand the goods are not available anymore in your warehouse for you decide to sell tomorrow to somebody else. However, FBA is just a holding facility for you while the goods are yours. Once Amazon ships it out to the customer, at that point, you have to record the sale. So that's the first big problem, that they took the inventory off their books before it was even theirs. The second big problem they made is that they said, we're going to be selling this to Amazon at a 40, 50% markup. Now, you all know out there, there's competition like crazy. And, you can decide to sell it for, I don't know, $30, and then sometimes you have to lower the price. Or sometimes there's like a lot of unexpected fees that come in. There's a lot of fees that can come in Amazon. You got the ad fee, the storage fees. So one of the things you want to make sure is that, when you can't really record the sale of the product, even if you plan to do a 40% markup on Amazon, you really don't know what's going to happen till it actually doesn't sell. And that was another big mistake they did. And in a matter of fact, I think they're making like 10%, they have like a 10% return on investment on Amazon. It's a tough market for them. But unfortunately, they're not doing more than 10%. So when they originally recorded a 40% markup on the invoice, the problem was that they were already recording profits when those profits actually never happened. Besides that, the inventory is still theirs because they didn't even get paid for it. It's not like they have a receivable. It's not like anybody owes them money for it. So those are two problems that they did. Number one, that they recorded the inventory as sold before it was even sold. And the second problem, what they did is they decided to do a markup, which actually never happened till the product doesn't sell. So the point is that anytime you purchase inventory, if you have a 3PL, you have your own warehouse, you have two 3PLs, one in New York and one in California, the inventory is always going to be yours till actually Amazon sells it. And at that point, once the sales happened, you can see, okay, for how much money did I sell it? And sometimes you have a repricer that can also constantly keep on changing prices. So after the sale happens, you see what the sale was. You see also what the actual fees were, not just estimated fees. And once you put that all together, that's when you can really determine, your true profit and loss and see what's going on there. So on this slide, we're going to go to the next thing is cost of goods sold is only reported when you do a sale. So now we're going to jump from a different angle. And over here, I made a little chart, like a sample P&L, as you can see on my screen. We have accrual-based accounting and cash-based accounting. So what does accrual-based accounting mean? And what does cash mean? So the word accrual comes from the word accrue, like as things like accrue, like as they pile up. Like I would say, like as of like, let's say you have a box of sand and you keep on accruing more sand, or, you keep on accruing, things are piling up. Accrual-based accounting is done that the theory behind it is that you record your sales and your expenses when they happen, not when you get paid, or not when you pay for them, both ways. So I don't want to dive too deep into this, but just like a simple scenario, let's say, for example, you're doing some wholesale. So you're selling someone, you're generating an invoice of $100,000 and you give the customer net 30. So that $100,000 invoice, let's say you record the invoice January 15, but you won't get paid till February 15. So the time of recording the income is January 15, when the sale actually happens. And so too is for expenses. Like let's say, for example, utilities, right? So let's say you get a big bill now it's coming in the summer. So let's say in July, you get a huge bill for AC in your warehouse or the office, and you're not paying it till like the end of August. You don't want to record in August. You want to record it in the time when these expenses happen. I'll give you a better example. Let's say for an Amazon seller, one of the things I like to do is backdate the storage fee. So the way storage fee works is that Amazon charges you on the 8th of every month for the previous month. Now, it could be the 8th, it could be a day before, a day after, but usually around that time frame is when the storage fees come out. So let's say in Q4 in December, where Amazon hikes up the storage fee rate, you're going to have a very high storage fee rate, but that's not going to come out of your seller account up to like January 8th or 10th. In reality, that high storage fee has nothing to do with your January sales, because usually, I've seen accounts where they did December 2.5 million, and in January they only did like 500,000. So, and in January, if they paid $50,000 storage fee, it made sense because they did 2.5 million sales. So you want that $50,000 storage fee in December, reflecting the proper month. So that just gives you like more context, like to understand what accrual means versus cash. Now in Amazon, one of the main aspects besides the storage fee is there's the sales and the cost of goods sold. So for example, let's say in 1 month you did, let's say so in this case we have a P&L, $382,000. Now let's say in the month of June, you did $382,000. However, you only got $127,000 in the bank. Now, why is it so? First of all, we have disbursements. So disbursements go bi-weekly. Now, the bi-weekly disbursements don't go like a cookie cutter. They're not from the 1st to the 15th and from the 15th to the 30th. The disbursement can start at the 5th and finish at the 20th, and the next one starts at the 20th and finishes at the following 5th. So what you want to make sure is that the sales of that month are in properly for that month, meaning the actual sales that posted to your settlement. That's what you want to make sure is in QuickBooks as your sales amount. The next thing is you also want cost of goods sold. So cost of goods sold means to say, as we explained in the previous slide, the inventory is still yours until you sell it. That was more in a term of like where somebody was trying to get rid of the inventory at time of shipping it to FBA. But let's say in a different case, let's say in a sense where people like, they don't realize what they're doing in their books and they're like, okay, I have to pay my vendor today $50,000 for a pallet that he's actually delivering. So how do we enter that? So some people say, oh, I'm cutting a check now for $50,000. So let me just expense it. And the answer is you don't want to expense it right away. Why? Because it's still, you want to run your books based on accrual-based accounting. Now, what's going to happen if you expense it right away? It's going to look like the right side of the spreadsheet, where basically you're going to end up with a huge loss. Now, let's just think like in the month of November, where you're purchasing for the season. So you're going to be racking up your purchases, right? You don't want to show November a loss and December maybe a loss and January huge profits. You want to show November what you actually made in November. And what did you make? You want to record the sales that actually happened in November. And along with that, you want to record cost of goods sold, which is the cost of the material that's sold. Meaning to say, if you sold a product that for $10, but the cost is $5, meaning how much did you actually pay for that product, then your sales would be $10 and your cost would be $5. So you want to focus on recording the sales as they happen and recording the cost of goods sold as they happen, not when you pay for them. So like, for example, November, if you're paying for a lot of material, you don't want to record a huge cost of goods sold. And then, or if you want to call it purchases, record like, oh, I have now $500,000 worth of purchases, but I only got into my bank this month 100,000. No, that's not what you want to do. You want to make sure that when you purchase, it goes into inventory. And then when the sales happen, you record the sales. And at the same time, when you're recording the sales, you also report, you take out of inventory the amount, how much the cost of the products, you take it out of inventory and you expense it as cost of goods sold. So that is the main differences between the accrual and the cash. And we will be focusing tonight on teaching people how to use accrual-based accounting versus not using cash-based. Now, one of the things of using accrual-based accounting is anytime you want to sell your business, one of the things is that, well, people would, like we discussed before, like what is your business worth or how much money you're actually making. All those stuff you actually will see on accrual-based accounting. The fact that you purchased this month $50,000 more goods than the previous month, that doesn't mean that you had a loss. Even if there's no money left in your bank, you're not at a loss. That's because you expanded your inventory. You might have drained your cash flow, but that does not put you at a loss. So I had a different interesting story once with another customer. They were like very hands-on and they were like really good when it got to numbers. And this is another idea why accrual-based accounting is so important. So what happened was they ran their books on cash basis. Why? Simply because it was easy. They had an accountant. The accountant was actually more like an outsource, and wasn't too competent in terms of like putting in the right books. So they said, we'll just do cash basis accounting. Now, don't get me wrong, the IRS accepts cash-based accounting. I mean, there's a limit up to how many sales you can do if you're an inventory-based business, but for tax purposes, it could work. However, for running the business, it's not going to. What happened was they decided what they did is they wanted to know how much money they're actually making. So this accountant was doing cash basis bookkeeping. So basically every time money came into the bank was income. Every time they paid a bill was an expense. So let's say instead of, every time they bought new inventory, that more purchases. So what they did is, why did they approach me? Because they really want to know, are we making money or not making money? Like even in QuickBooks, if I showed a gain, that only means, it didn't mean make money. That just meant that this month we didn't do a lot of purchases. Like somebody told me, like in the last 3 months, I haven't brought in any containers because, I have a lot, I stocked up a lot last year because of all the supply chain. So now I have a lot. So that doesn't mean they made money. And if the P&L showed a loss, that doesn't mean that they lost money, because that could have been because that month we could have just purchased a ton of inventory. So they were like, we don't know what's going on. Now, what was their solution before they approached me is they decided they're going to use a software which will tell them on every single product how much money they make. So they use like some type of reporting tool. And let's say they sold a product for $20 and the cost was $10. And let's say Amazon fees was $5. So they made $5 profit. Then they somehow put together a spreadsheet what their overhead is. They figured out that their overhead is $50,000 a month. And they took all the sales from that month and they split their overhead by the sales. So that meant to say that, let's say they did $500,000 in sales. And after cost of goods sold, meaning after the cost of that product and after everything, before overhead, meaning that's before payroll, before rent, before like any like overhead expenses, they made $100,000. And then they went and they took their $50,000 overhead and they split it by product. So what they were trying to do is they were trying to find out if there's any product after overhead are losing money, meaning they knew their profits after cost of goods sold and after all the Amazon fees, but they wanted to take it a step further after labor, after warehousing, because maybe there's certain products that take a lot of labor, maybe it's because, there's a lot more overhead involved. So they somehow came up with a formula to split their overhead into every single product. And they had a profit of $50,000 that month. Now, I actually set them up a set of books. I didn't actually just go with the reporting tool. I set up a set of books and we brought everything into QuickBooks. And when I finished the month, there was no profit. So the question is, what was going on there? So they were very mixed up, like no clue, they were like, we counted everything. What do you have different than we have? So I said, listen, I really need to compare apples to apples. I have to see what you decided. Like, how did you come up with this number of $50,000? So they said, okay, payroll is X, rent is X. And they gave me a whole breakdown. I told them, well, guess what? This month you forgot to add in the overtime. You also forgot that you had this one-time expense. You also forgot that shipping costed you a little bit more this month. You also forgot that you had to pay $10,000 towards some sort of fee for some product. So what ended up happening was that they didn't book everything, meaning they weren't working off a set of books. They were actually working off their brains. And they had very good brains, to figure all that out. I was very impressed with them. But at the end of the day, you still need everything down on pen and paper to making sure you don't forget about anything. Because if you're gonna work off your brain, okay, so this month I probably made this amount of profit or this amount of profit, there's a lot of other things you might be missing. Now, what an accounting software does, one of the things that accounting software does is called a bank reconciliation, which means to say is that we take your bank account and match it up to QuickBooks. So let's say in the beginning of the month, you had, let's say $100,000 in the bank. And then you had, let's say, another $100,000 worth of deposits, $50,000 worth of checks. That means so your ending balance is $150,000. You want to see the same thing in QuickBooks. So that means to say that why? Because if the beginning balance in QuickBooks of your bank account in QuickBooks and the ending balance in your bank account in QuickBooks actually matches your bank account, that means to say that every single dollar that came in and every single dollar that went out is actually recorded in QuickBooks. That means to say your books are accurate. And that means to say you have everything. So that's why it's really important to have a proper P&L. Besides keeping an accrual-based accounting, everything, you want to have a proper P&L. You want to have a proper set of books that actually reconcile with the bank account. So you can actually, when you see the numbers, you can actually rely and know that you're seeing the right numbers. Now we're going to dive in a little bit more on a product level. So before we were discussing the important part of overall P&L, of having it on accrual based and not having, on cash basis, and then making sure you have your overhead properly accounted for in QuickBooks and making sure you haven't, everything else. So next thing is you want to have, which is very important, a true profit and loss per product. And this is a screenshot, a snippet from the ConnectBooks reports in our software, how they look. So we're showing you here, like you have an Apple iPhone. Obviously, it's not an Apple iPhone, but these are some fake numbers here. I mean, whatever, it's a dummy data, and you have the quantity, the gross sales, and you have all the fees, the ads, the other fees, and this you get at a glance, and you see exactly what's going on. Now, a lot of people, what I have seen happen is they get sidetracked by certain stuff. What do I mean by that? So let's say Amazon fees. Everybody knows Amazon fees is, it's a monster on its own. Or ad spend is another monster. And you want to make sure you understand the stuff properly so that when you go over your profit margins, you actually understand, how much money you're making after all fees put together. But one of the things you have to also remember is how many returns do you actually have? How many of them are sellable? How many of them are unsellable? So I'm trying to point out here is that it's not just looking at all your fees and ads and stuff like that. It's really going another step further. Accounting for all your returns. Returns are, I understand that you want to look at sales, like just for, I don't know how many people know, but if you look on the business reports on Amazon, which I know a lot of people look at, on the business reports, they don't include returns. Like when you look at your business reports on Amazon, they're just saying how many sales you did. These certain products that returns alone can put you down the drain. I had an interesting story with a customer who, before she started using ConnectBooks. So what happened was that she was using a different software, like just a reporting tool. She never had a set of books, and she was using a reporting tool, and to see, to determine the profitability on every single product. And I would say on average, she had always in the bank, I would say like around $500,000. That's what she told me. She had like around those numbers, anywhere between 400,000 to 500,000. That was, the bank balance all the time. What ended up happening is at some point, the cash flow started dwindling, and she just did not have that amount of money anymore in the bank. And she didn't know what to do. She didn't know where to begin. So she started reaching out to consultants, other people. And one of the things people are asking her is, do you have a proper set of books? And since her books were not on accrual based, nothing, everything was flying. It was really impossible to know what's going on with the company. So she reached out to me, and we told her we can set you up ConnectBooks and we can help you get a set of books. She actually had an outside consultant who was doing her bookkeeping, and we worked together on getting her set up and getting it and doing everything properly the right way. So at the time when she signed up, I remember talking to her. I don't know. I mean, she didn't tell me she didn't tell me that story. She just told me like, I really need to know what's going on. I'm working with my partner, and we're having cash flow issues, and we need to set this up. So she signed up, we got her up and running. And then 6 months later, I was at a trade show, and she came over to our booth, and she told me, I really need to tell you something. And she introduced herself. I mean, I've never seen her before. I was like, oh, wow, it's like it's great to meet you. And, we spent so much time and getting everything up and running. She's like, yeah, I have to tell you something. She's like, in the beginning, I wasn't sure what to do. And then, she had this cash flow issue. And then we signed up for your software. And after everything was set up, 3 months into the process, she started realizing that certain products, which she always thought that were making money, she was actually losing money. And she said that one of the things were those people were not calculating any returns. They were not calculating. And we also go a step further with returns. We don't calculate all returns as a loss. It depends, because when you do an FBA, if the product is sellable, we just put it directly back into inventory. If it's not sellable, then, we'll take it out of inventory and expense it. And she said that, there's so many little fees ins and out that a lot of other softwares leave on the side and they don't calculate it properly. And that was a problem. She said, I thought I was making money in those products. And then I saw afterwards I wasn't. So what did she do? So she told me I had just no other choice to raise my pricing. She's like, I was scared at all times to raise my pricing because of the competition. So since but since I wasn't making money anyway, what was the point of keeping my business open if I'm not making money? So she's like, I saw I was losing money. So I saw I had to raise my price. So I just did it. And she's like, guess what? The last 3 months, we raked it in. So if she would have been set up properly in the first place and, like run a business as a business should run and have the proper books and have the proper reporting and making sure she knows the numbers and knows what's going on, she would never have lost so much money and never have gone into such a, she went through a hard point at that time. She was having a hard time with her partner, and it was really, stuff weren't working out. Thank God she was able to get back on her feet and, get the business back up and running, but it could have been avoided. So, my point is that you really want to make sure that you have, you know your profits and down to the penny, and you know how many, you know exactly what you're making in every product, not just by estimating or guessing the Amazon fees, by looking at the actual Amazon fees Amazon charged you. I mean, I have to say there's enough times that people, like, they look on the FBA calculator and they anticipate how much the fees are, and then when it actually sells, the fees change. You have those hijackers that change dimensions all the time, which could cause your fees to go up or down. And there's a lot more. So you want to make sure that you properly account for every single penny and making sure you understand what your true profit and loss is. The next thing is you want to make sure that you're breaking down, you want to make sure you're getting the Amazon fees per item. And over here, we show you a breakdown of the Amazon fees for this product that we showed before. And we give you a full breakdown. You have the commission, fulfillment fee, promotion, all the different fees. And you want to make sure you break that down. Now, the next thing is also, you also want to make sure that you kind of understand your P&L. So over here, I'm showing you on the left side a P&L from QuickBooks, and I'm showing you on the right side a snippet from ConnectBooks, where you can actually match the total sales for a particular month. So like this is the month of June, you see 274,000 sales, and then you want to see a per item breakdown of a $274,000 in sales. So why is that important? And I'll show you a different story that I had with a customer of mine. They set up on Amazon, and they were actually interesting. These people had a lot of money, meaning it was 3 partners, 2 of them were in real estate, and they had a lot of money. So they were able to really fund the business very well. And the third person was somebody who had Amazon experience. So they started off the business. This was back, I think, in 2018. And the first year they did like, I don't know, a couple $1 million in sales. And they had no clue what was going on. And we actually set them up a set of books. And after we set them up a set of books, we showed that they made no money. So what was our next step? Well, the next step is what these people wanted. They said, okay, we see that we did last year 5 million in sales, and we see on our P&L that we made no money. However, we need a breakdown of that 5 million, and we want something that matches. We want something that when we see that number, we can actually, relate to it. Not just like, don't give us any other software where I give a breakdown of 4.5 million, don't give me, or 5.5 million. We want to see these numbers in the P&L. Give me an exact calculation how you got to these numbers. And that's why, we just want to actually see what's going on, because there's a lot of different tools out there, and everybody has slightly different ways of working. Everybody reports stuff differently. For example, like when an order comes into Amazon, you have the order date, the date the order gets placed. Then you have a date when it ships. You have an early ship, a later ship, and then you have a posting date, which the date that the money becomes available on your settlement. So there's so many different dates attached to each order, and you're not sure what date each software used. And you want to make sure that when you see a P&L in QuickBooks, you have a report that breaks that down per product. So we're showing you here where we're able to do this for him. And once we did this, he was able to actually visualize and see which products were losing money. And, because he had to cover his overhead, he had to make sure that he was hitting a certain profit margin. And once we were able to do this, we were able to show him which products make money. And the next year, he made over $1 million in profit. I know that's what he told me a year later. The year afterwards, he was already good to go on his own. So I didn't hear from that, but I mean, I think he's making now at least 2 to 3 million in profit every single year. So the lesson from the story is to kind of like get a real deep understanding. And when you see you're not making money, you want to kind of dig deep and kind of get the per product report, match it back to your QuickBooks report, and kind of see what's going on and where exactly are you not breaking even. There's times, just as a side note, there's times like where you can be showing profit, but you're not really making money. Like somebody asked me the other week, he's like, is 10% profit considered a nice profit margin on Amazon? So my answer was to him, it really depends. I said, if you're working out of your house and you're just a one-man band, it's just you and everything is good, then 10% could be, if you're doing, let's say, $500,000 in sales a month, you're making $50,000 a month, that would be very nice. But if you're running a team of 10 people and you got to cover payroll and you got to cover, a whole staff with office and everything else, I don't think 10% is going to work for you, because from $500,000, 10 people is going to cost you more than $50,000 a month. So I don't know if that really is at that point a nice profit margin. So when you know what your overhead is, you know where your sales is properly, you have everything properly in QuickBooks, and then you have a product report, which gives you the ROI and the profit margin of every single product, you kind of see where you need to perform and where you need to do better. So here's another important thing, is what you want to make sure is your books are accurate. So same way as I explained to you that you want to make sure your bank account matches to your QuickBooks, because you want to make sure that every dollar comes in and every dollar goes out. You want to make sure it's recorded in QuickBooks. Another thing is also you want to compare back to Amazon. You want to make sure that the numbers you see in QuickBooks are what you see in Amazon. And this is a screenshot where I'm showing you where we compare the data from QuickBooks back to Amazon. And we want to make sure that, the numbers actually match. Now, over here, we're going to discuss some more about getting a higher valuation upon exit. So there's a few tips I'm going to share now. And, it's something that to keep in mind, because when that offer comes, you don't want to be busy 3 weeks or 4 weeks working around the clock overnight, fixing up your books or getting it done. And for all you know, you're going to work 4 weeks, and then you're going to hand over your P&L and all your books. And the person is going to say, oh, this is, we're only doing such an offer. And you're like, oh, why'd I work so hard? Why'd I do all this? If you have proper books, anytime you get an offer, or anytime you want to go for an offer, you want to do something, you want to have it set in stone. You want to have it ready. And just like, here's my P&L, here's my balance sheet, here's my report on how much I'm making per product. And, let's see what you can offer. So what I'm showing over here is, as we spoke before in the beginning, you have accrual-based accounting and cash-based accounting. So when you do accrual-based accounting, basically, in this scenario, if you look at cash-based, you have $5 million in cost of goods sold, which means $5 million in purchases. Then we also have $1 million worth of shipping. So I'm talking shipping is containers, bringing in from China, bringing in from overseas. So in this case, we spent $5 million to purchase material, plus we spent $1 million on shipping. Now, at the end of the year, we have, let's say, $2 million worth of inventory, and we also have a $500,000 worth of shipping. So what that means to say is that shipping is something that you also want to put into inventory. So if you buy a product for, let's say, $10, and that costs you to import another $5, the cost of the product is 15, not 10. Now, that matters for two reasons. Number one, you want to have your true profitability. You want to make sure that you have the cost of goods accurate so you understand what your true profitability on a product level is. But another thing is what you also want to make sure is it affects your P&L at the end of the year. Because if your P&L shows, if you look at the right side, the cash, your net income is 1.9 million and the accrual basis is at 4.4. And if you use, let's say, a 4x evaluation, you're going to get much higher valuations using accrual-based accounting, not cash-based accounting. Now, what I'm saying is that it's pretty understandable that if you're coming to sell your business, you're going to make sure you have the proper inventory. And let's say you spend $5 million worth on products, you're going to put into inventory, and as they sell, you'll expense it. However, you also want to take care of your shipping. You want to make sure your shipping is properly entered in as inventory. And then as long as the product sells, the amount of shipping costed with the cost of the product, that's what comes out of inventory. All right, so we're gonna show you now how to do accounting and how to properly do accounting for your Amazon account, and without using any software, do it yourself accounting. We'll walk you through this guide and show you what to do. So the first thing is you want to enter your sales and fees into QuickBooks. So how are you going to record these sales? What are you going to do? So you're obviously going to open up your QuickBooks. You're going to create an invoice, right? But where do you get the data from? We spoke before that we're not going to be using the money that came into the bank. We want the actual sales that happened on Amazon. So here you have a screenshot is what you're going to do. You're going to generate a summary report from Amazon. You're going to go to the report section on the top, and then you're going to go to the payment tab, and then you're going to go to date range, and you'll do generate report. Once you get to this tab, you hit generate report. It's going to pop up another screen, and then you're going to select the summary. And this is going to be, we did in this case, we're doing the month of June 2021, and you do generate. Now, what's going to generate is going to have such a type of report where you're going to see this type of a P&L. This is what you'll see. Now, over here, what you can do is you're going to create an invoice for all the sales. So you're going to go into QuickBooks. You're going to create an invoice, which is simple, super easy. Now you can Google it, how to create an invoice in QuickBooks. And you're going to take all the income. So in this case, you had income of $269. The credits is like, these are your sales. And then the debits is what decreases it. Like, for example, it did $236,000 in FBA sales and it had $14,000 worth of returns. And then you can use a credit memo, which to offset the fees, you can use take all the fees from the expenses. There's $49,000. You have you see FBA selling fees was $30,000. That's the commission fee. The fulfillment fee was $15,000. And, like for returns, they refunded. They have the shipping label and all those other stuff, which, you have a nice summary how to record it. And then the taxes, next thing you'll do the loan payment. So in this case, there was a loan to Amazon. Amazon had given them a loan. So Amazon took a payment of $69,000. So you see in the bottom of Amazon lending, that needs to be deducted, from the sales, and it should be entered in a separate account as a loan payment. And then the amount that actually Amazon deposited to the bank was $128,000. In taxes, this case, it can be excluded. So since it depends on the state, some states, Amazon, in most of the states, Amazon already collects the tax for you and remits it to the government. So in this case, you see the credits were $16,371.87 and the debits were as well. So basically, Amazon handles everything. However, in certain cases where Amazon does not handle the taxes and they will give it to you, you need to record that as a liability to the government. And at the end of the quarter, you file sales tax return. You'll take that money out of your sales tax account, meaning out of that liability account that you record. So this is pretty much in a nutshell what you need to do. It's pretty straightforward. You create an invoice for all the sales. You create a credit memo to record all the expenses. This will be on this side. And then you record a loan payment, and then you net out the taxes. Now, this is just in terms of recording the sales. However, what will you do in terms of recording cost of goods sold? So to calculate cost of goods sold, you're going to go back into your Amazon account. You're going to go to reports, and you're going to go to the payment tab, date range report, and then you're going to do generate report. This time you'll generate a transaction report. You'll select the full month, make sure that the account type is all, and you select that whole report. Now, once you select that report, you'll get like a spreadsheet, which is going to look like this. And over here on line 8, if you select the line, you're able in Excel to turn off filters. And what you're going to need to do is you're going to need to modify the spreadsheet. So I'll show you over here. You have here a spreadsheet. Can you guys, can you see the spreadsheet on the screen that I'm showing, or you only see the slides?
We can see the slides. We can't see the spreadsheet. Yeah, only the slides. I can't see the spreadsheet. I can see a screenshot of the spreadsheet on the slide.
Sorry, I know. Can you see the spreadsheet, or you only see the screen?
Only the slides.
Only the slides. So let me just stop sharing for a second. And let me share again. Okay, so now you should see the spreadsheet.
We can, yeah.
Yeah, so on the spreadsheet, what you see over here is you have line 8, where I show you, you can select it like this. Go to the home tab. You can select filters, and this is how you turn on or off a filter. And then once you turn on or off the filter, you'll have over here the type. So, and then you can select over here refunds. And then over here, you also have the option to select just adjustments. So one of the things you see on the spreadsheet is that Amazon gives you back a quantity, right? So here we have a product. I took off the SKUs and the description, but over here you see there's an order and the quantity is 1, and you have the amount that the product sold for with all the fees. Now, what we want from this spreadsheet is just the quantity, because the sales we already took care of from the summary spreadsheet. What we want to get is from here the quantity. And what you're going to need to do is you're going to go over here to the type, and you're going to filter for refunds. Now, if you look at a refund, this line right over here, you notice that the quantity is a positive number. So if you're going to take these two together and you look in the bottom on Excel, you can see the sum is 2. So that means to say that if you want to, what is calculated cost of goods sold is you want to calculate how much the cost of each product is. So if you're just going to take, a total of column, obviously you do a total by SKU, but if you take the total for column G, you're going to have, this is actually 0, because this should be a negative 1 and this should be a positive 1, because this is a refund. So that's one thing you want to do. The second thing is the adjustments. So just to explain how softwares work, with the way Amazon works in terms of generating is, they always record a positive quantity. You also have to take into account the type. So when it's an order, it's a positive. When it's a refund, it's not a you want to make it a negative. When it's an adjustment, you want to do is check the dollar amount. So you want to go to the right side, see how much the adjustment was for, and then based on that, if it's a positive adjustment, that means to say that Amazon like reimbursed you for something, and sometimes they can reimburse you for something, and then they find that let's say they reimbursed you for something, and then they found it in the warehouse and they started giving it back to you. So then they'll take money out of your account and they'll give you back the inventory. So that would be like a negative adjustment. So adjustments can be either negative or positive, and you have to be out there to look out for that. So once you finish making the adjustments, which like you'll do it based on filtering the type. So when it's a refund, you just do negative. And if it's adjustment, you go through adjustments, make some negative, some positive. And then the best thing would be to delete these lines from the top. Just do like that, delete. And then I would just put the mouse over here, press Control A, which it selects the whole thing. And then you go over here and you do insert pivot table. And you select the state range. Okay, so this is a pivot table. And what you want to do in the pivot table is you want to get a total quantity for every product. So you select over here the quantity. I'm going to first select the SKU. So select the SKU and we select the quantity. So product one, I sold 182 pieces. And then over here is where you're putting your cost. So let's say product one cost me $5. And then you'll do equals this times this, and that will give you $910, which that would be the cost of the product. Now, I did not include unsellable returns because that's not possible to do this report. You have to pull the returns report and go through each order. Softwares obviously can automate that, but on doing this manually, getting this done is a job in its own. Okay, so over here, I'm showing you in the slide how to pull out the refund. And then the next thing is going to be the adjustments. So if it's a positive adjustment, the quantity should be positive. And then here's how you're going to create yourself a pivot table. Once you take a pivot table, you take the total quantity sold times the SKU, and that should give you the total per SKU time, the quantity sold. Now, I went through a little bit fast, maybe on the do-it-yourself accounting, meaning I explained pretty much what to do. However, it is time consuming getting all this done and, spending a lot of time figuring this all out, keeping track of, of your cost of goods sold and keeping track of every single product. So over here, what I'm going to show you is how to get it on autopilot. So the first thing is in ConnectBooks, you'll have a place where you can upload the cost of every product to ConnectBooks via Excel. So instead of keeping a spreadsheet like I showed you before, where you do a whole pivot table and you have to calculate the cost of every product, and if you have 20 products, might not be so hard. When you have like 800, it's going to be more work involved. So in ConnectBooks, you have the ability where you just take a spreadsheet, you put in what the cost of every single SKU is, you just give it an upload, and you'll see exactly how much each product is. Now, instead of downloading those summary reports and downloading all those simple sheets in ConnectBooks, we just automatically pull all your data from Amazon. We reconcile every settlement report, making sure that it all matches to how much money came into your bank. And you just have a simple export button. You just hit export and your data will come into QuickBooks. Listen, unless you want to spend your Sundays in the office catching up on bookkeeping, or stuff like that. If you don't want to be busy with it and you want to just set this on autopilot, this is what we do. The next thing is also, besides just signing up to ConnectBooks, you'll get solid reports on how much money you're making per item. You get down, including the ad spend, returns, sellable, unsellable returns. You'll have the ads, storage fee, long-term storage fee. We also started including recently sponsored display ads, which Amazon started breaking down per product. So all those information you'll get part of your ConnectBooks package. And then another question is what happened when the cost of a product changes? So there's another game changer. When you're dealing with spreadsheets, if your cost is very staticky, for example, you buy a product for $5 and it always stays $5, it's good. But we spoke about a few things. We spoke about one of the things is you want to make, first of all, what happens when the cost changes. So in January, you purchased a product for $5. So let's say you bought 100 pieces and you sold 50 and you have 50 on hand. What are you going to do in February? So February, you purchase another 100, but now the cost is 7. So I have 100 pieces at 7 and I have 50 that are 5. You need to combine the two and come up with a new average. The next problem you're going to have is what's with shipping. What are you going to do with shipping? So let's say, for example, you buy a product for $5 and it costs you to ship $2. So really it costs us $7. And now let's say you buy 100 in January, you sell 50. Now in February, you purchase another 100. So let's say the cost of the product went up with $2. So now the product costs you $2. And let's say another thing is the shipping went from, let's say instead of costing you $2, is now $3. So now your new average cost is $10. So you have to keep track is not just when the cost changes, also when the shipping costs, and kind of put that all together to know exactly what you're doing per product. And that is complicated to do in a spreadsheet. I don't have any simple solution on a spreadsheet besides keeping track of every order and every product and spending hours on it. Or as I said, you can just upload it to ConnectBooks, upload it to your cost. And then when the price changes, you go into ConnectBooks, you get this nice little box and you can specify, this item costs us $2. And then the prep cost is, let's say $1. The item cost is $2.50. And then we have the old stock, which was 50 units left on hand at $2. And then we have new stock of 500. So instead of recording this product at $3.50, we're giving you a new average cost at $3.36. And then let's say March 1, the price went up again. This went up to $3 and the shipping went up to $1.25. But we still had 100 units on our old stock. And now we purchased $6.50. So then we'll get a new average cost of $4.13. So if you use a software, you have the ability to automate this and you get everything on complete automation and you go from there. We also have another feature that we can show you how much inventory you have on hand and how much, which products you're running tight on and how much stock you need and how many to reorder. We'll show you the total products and we'll tell you how much is inbound, what's available, and we'll tell you also the main thing is we'll give you the days of supply. Like we'll show you the first product, they have available supply enough for 9 days. And these are the dates when you should reorder. And these are the quantities you should reorder. So once everything is properly configured in ConnectBooks, like for how many days you want to keep something on hand, like how many days you want to have stock, and then like what your safety stock is, your lead time. I mean, safety stock is now maybe it's a little bit easier, but I know COVID, it was hard, but I think if you had some, let's say, for example, on average, you want to keep, let's say 100 units on hand and, you want to have a safety stock of, let's say another 20 units and then your lead time is 30 days. So we'll give you the time when to reorder and how much to keep in stock and how much to have on hand. All right, so I thank you all for staying with us this presentation, and we will begin to move in now to Q&A for anybody else who has questions. And we want to give everybody, the first 25 signups that we're going to offer 10% off for the first 12 months. And we'll give them a coupon code to use, which is Seller Systems. That's the code they should be using when they sign up. Accounts that are doing more than 25,000 orders a month should email sales@connectbooks.com. And if they want to get onboarded, and typically talking larger accounts will have a lot of products. They will need more attention, meaning to say in terms of getting to understand the products and understanding how to account for everything properly and how to set up everything properly, how to do it. So for larger accounts, they should email sales@connectbooks.com and we'll have a rep reach out to you and get it done. All righty.
Awesome, thank you. I definitely learned a lot there. There's no doubt about that. I know we were talking before about a while back, I spent weeks and weeks entering invoices into a spreadsheet, and I could have avoided all of that if I knew what I was doing at the outset. Guys, feel free to raise your hands if you've got questions. I know that there's a couple in the chat that I'll read out. There was one question that I had that I can see Rod has also asked. So QuickBooks is the most commonly used software globally, as I understand, but here in Australia, a lot of people do use Xero. I don't know whether you have that over in Australia. One of the questions in the chat was, does your software connect to Xero?
So at the moment, we only integrate with QuickBooks Online and QuickBooks Desktop. We do integrate with all different versions. We do have Xero on our roadmap, and we should have it probably, I'll say, in the next 3 to 4 months, have it coming up.
Okay, awesome. So is it commonly used over in the US, or is it just over?
I mean, from our end, I mean, what I'm seeing is I think a lot of people like in Australia, maybe the UK, using more Xero. Versus in the US, I think a lot more using QuickBooks, because I mean, we haven't gotten too many requests from it, but it's getting more and more, and we're gonna, get to work on it.
Okay, awesome. We've got about 1,000 members in total, and fluctuates a bit as people join and leave as well. But we have, out of those 1,000 members, we have about around 200 to 250 over in this side of the world as well.
Wow.
So yeah, I imagine quite a lot of those would be using Xero. Jesus has said, what's the difference of using a tool like Seller Legend or any other sales analytics tool? Seller Legend gives you full P&L reports, while cash basis accounting is just for taxes. What's the benefit of doing accrual other than selling the business?
So it's not just about selling the business. It's about understanding how much money you make on a monthly basis. So what happens is, like I said a story before, and that's actually what was the story was. They were using something like Seller Legend or something like that to see their sales. So they did, like, let's say $1 million a month. And I don't remember exactly all the numbers, but I remember that they made $100,000 profit after all the Amazon fees and after their cost of goods sold. So they did, let's say they were doing $1 million in sales, and their gross profit was 900,000. Now, the question was, what's with the overhead? Is your business actually profitable after, you did that $100,000 in sales? Meaning, after if you stayed over the 100,000, is that covering your overhead or not? Now, what they did is they took their money and they took the overhead and split it by product. So like they went to like this software, let's say something like Seller Legend, and put in the cost of every single product, they added like a prep cost onto every product. And what came out that they made that month 50,000. The problem, what happened afterwards, is that when we did it in QuickBooks, they came out with nothing. And that's because there was a lot of other expenses that weren't accounted for, a lot of other stuff. These reporting tools are great, but they're not really accounting softwares that are going through your bank account and all your credit cards. If you have 10 credit cards, 4 Amexes and a Chase and a Visa and I don't know what, in QuickBooks, you hook that all up and you get that all properly connected. So that's how, when you go through that, you can kind of, you can match it all up. So there's a very big difference. And, that was kind of a big eye opener for them, that they actually just like barely broke even that month versus what they thought they were making $50,000.
Huge difference. Huge difference. I know, Mohammed, you had your hand raised. Did you have a question as well? Did you want to jump in?
Yeah, it's still related to the previous questions, actually, with Seller Legend. I'm using Sellerboard. It's a software that connects Amazon, transaction payments into its I think they say it's an accounting software for Amazon sellers, seller board.
Yeah.
So what's your pro and cons using this type of softwares? Because I really rely on it a lot.
So seller board is a great tool, and you know, all what it does is it tells you if you're making money on a product level, meaning to say, when you sell a product on Amazon, let's say for $100, what is your takeaway from that? Now, there's a few other differences where it won't help you. Number one is, as your business expands, and as I said before, you want to make sure you have all those one-time expenses that only happen one time, or you had no choice, all those one-time expenses that happen, you want to make sure that those expenses are probably booked in some sort of accounting software. And you want to make sure that they in line with the reports that you're seeing on seller board. So if you're seeing that you're doing X amount of money a month in sales, you want to kind of get understanding like, okay, so when I do $500,000 a year, I let's say net 10%. So when I do $1 million a year, I also want to still continue netting 10%. So you want to kind of be able to forecast your projections and understand like how you're growing the business, how your overhead increases as along with it, how your sales and fees increase along with it. So you kind of back down to your net income. Sometimes you see that, and you can see it in these tools, like you see like how much money you're making. But the problem is that a lot of times you're not having all those overhead expenses, or like before the season, you bring in a staffing company, you bring in an agency, you're bringing other people in, and you want to account for all those other expenses to really understand, because believe it or not, a lot of times you're really just not making money. No, I mean, I'm not saying you particular in anyone. I'm saying like, but things. I mean, we just signed on a different seller, doing like, I don't know what, 600,000 a month of sales, and we're showing after 6 months $300,000 in gross profit before overhead. Now I know he's running a pretty large operation, so I have a feeling that after start accounting for stuff, there's not really too much left. And that's really, where you need to have a set of books. There's also another thing is where it could get more complicated is once you start having a lot of products and your costs start changing. So in QuickBooks, there's more of an option to keep track on item level of every single product. You can do it either by keeping track in like Sellerboard or like using a software like ConnectBooks, or you can also keep track of it in QuickBooks. Like for example, let's say you're buying a product at $2 and you buy another one at $4, and then like as the prices go up and down, it gets more complex to track the cost of every product with those softwares. Versus where you use QuickBooks, the cost of the product is going to be based off the invoices. So for example, if you enter a PO, you create a PO in QuickBooks to your vendor of, let's say you want to purchase $50,000 and you have a bill. So that bill when it gets entered to QuickBooks records that bill on a product level. So what, when you want to see what the actual cost of the product is, QuickBooks tracks the inventory, knows the cost, and knows everything. You have that right there on your fingers instead of just like guessing what you think it is. Before you know it, the number is completely off.
Yeah, thanks, man.
Rod, go ahead. You're next.
Yeah, g'day. How are you? How are we all? Got a follow-up question. I was the one who asked about Xero. It's funny you guys had this little chat today, because I was only talking to my accountant about this exact problem about 72 hours ago. I'm currently using Xero, and I've got to make the decision soon whether I bin Xero and go across to QuickBooks, because Xero's inventory calculations is an absolute disaster. What it does is if you enter a SKU 4 years ago and the shipping costs 4x'd in the last 4 years, it just creates an average of the price. So all the calculations are massively out. You said you're probably going to have integration with Xero within 4 months, which I'd say you're well and truly looking into it. As far as you're aware, would your system, if you integrated with Xero, would you overcome that accounting anomaly with Xero? Or is there a point where I've got to bin Xero and switch to QuickBooks? Because it's a disaster. My accountant actually told me to go back to Google Sheets or Excel to do the inventory calculations, which I don't really want to do.
So it would be hard to me to tell you right now about that particular scenario in Zero because I haven't like dived into it on a very deep level.
Yep.
But I do know that in QuickBooks that issue is not there. I myself have tested this, and I mean, the average cost that QuickBooks uses. So if you're going to be using QuickBooks Online, they use FIFO, first in, first out. If you're going to be using QuickBooks Desktop, they run an average. But in reality, like let's say even FIFO, or let's say for example in January you purchase 100 units at $1 a rate, and you sell the whole thing in January, and then in February you purchase another 100 units at $2 a rate, then that there really is no average and no FIFO, because by the time you purchase the new material, the old one was gone. So that I know for sure you won't have in QuickBooks if you do on an item level. In terms of Connect Books, if we integrate, what I would probably tell you is you can try out our software to see how we track cost of goods sold, not meaning to say we offer for QuickBooks 2 integrations, and we will offer the same for Zero. One is creating, items in QuickBooks and basically have QuickBooks calculate the inventory. The other option would be not creating items in QuickBooks, but keeping track of the cost of every single product in Connect Books. And then we just send over to QuickBooks the amount to deduct from inventory and put into cost of goods sold. So you can try our platform to see if that part works out for you. And if that does work, then, we'll overcome that hurdle with Zero. In terms of like the average cost, I will need to look more into Zero. But I could probably give an answer to you in 2 weeks in terms of we, could actually do that.
Does that answer your question, Rod? Did you have any follow-up comments or questions?
No, sorry, I politely muted myself to take up. No, yes, it sort of does. As I said, just so happens the party was talking about is the biggest issue I've uncovered with Zero that I can find. It's averages does not help for accuracy.
Well, what I would try to do in Zero before you like drop it as a hotcake. One thing I would do is I would like create a separate. I know in QuickBooks I've done it. Like I would create a separate invoice for like a test customer, and then create like a new test product. Let's say put in inventory for 100 units. Let's say in January, sell the whole inventory, then create a new bill in February, and then create a new invoice in February, and run a profit and a loss, filter it down by customer for that particular customer, and then split it by month and see how they report the cost of goods sold and changes. That should really help the difference.
Yeah, thanks.
We're also going to be rolling out a feature like in 2 weeks where we're going to be able to automate the shipping. So like a lot of people have issues now is that they're bringing in shipping from China. They're spending like, let's say spending now the price of drop, but let's say spending $12,000, $13,000 on a container. What you want to do is you want to take that container and split it by the CBM, the cubic based measurement, to understand exactly how much shipping costs you on the product level. And what we're going to be doing is we're actually going to be saving the CBM of every product in Connect Books, and then we'll be able to automate the shipping cost to QuickBooks based on what your recent bill was. So let's say you had a container of 12,000, and we'll know what's in that container, and based on knowing what's in the container, we'll have the shipping cost, and we'll just be able to automate that as well.
That's great. That's great. And you said that's going to be available in a few weeks, did you?
Yeah, that's 2 to 3 weeks. It's pretty much, it's almost finished. I mean, it's a very exciting feature because one of the things I like about the software is that we also run a bookkeeping company, which we do it on hand, and we actually get to experience the frustrations customers have. So we've been very frustrated with that. And we have so many customers, we have like 30 containers, and like, okay, so here's a spreadsheet, here's all this, go figure it out. And they're like, well, I won't be able to sell, I won't be able to do this, I won't be able to do that. And we're like, okay, well, we'll just do it. And we're spending hours on it. So with this new feature, we're going to be, I would say, to break down every single bill in QuickBooks by the CBM, meaning, and to get the shipping cost per product, and you'd be spending a minimum of 20 minutes, we'll be pushing that in 2 seconds.
Wow. That's great. You just mentioned bookkeeping. That actually brings me on to one of the other questions that was asked in the chat. Do you offer bookkeeping services?
Yes.
Or could you recommend someone?
Yes, we do offer bookkeeping services, and we do have other ones to recommend. You know, I would just say one thing about our bookkeeping services is that we only do bookkeeping for Amazon sellers. So whoever you'll get from our team to work on your account will be somebody who is very knowledgeable in e-commerce and will know everything. I would say it's more of a case-by-case basis. So like, you know, when a client usually approaches us, we have a conversation with them, like what type of bookkeeping you're looking for. Are you looking for very detailed, not detailed? Like, what are you looking to accomplish? And in that case, that's when we will, you know, recommend somebody based on what they're looking for. We will be also rolling out a partner page probably the next 4 to 6 weeks on our website, which will be vetted bookkeepers across the United States, people who we work with and we deal with. You know, we see right away when a bookkeeper calls into our office if they know what's flying or not. Just have a conversation for 5 minutes. You know, we'll see if they're not. And if we vet them and, you know, we think, you know, we know they'll do a good job, then we'll add them onto the website.
That's great. That's great. And if people want to contact you about bookkeeping, is that the same email address that you have on the last page of your slides?
Yeah, they should use the same email address, sales@connectbooks.com. And, you know, they should just put in the body of the email that they want to get some bookkeeping quotes, and we'll get for them as well.
Okay, awesome. And then I think this is the last question. Can you manage the setup for your software for people as well?
So we do give a free onboarding and free one-on-one setup with a professional bookkeeper, but that's just related to the software. So anybody who signs up for ConnectBooks, you know, the way it works is they sign up, they connect their Amazon account, and then it takes a day or two to load the data. And then when we start to connect to QuickBooks, what we'll do is we'll schedule an onboarding call with one of our onboarding specialists, and they will set everything up, and they will walk through the process of setting up QuickBooks. I mean, we don't do the QuickBooks setup, but what we want to do is we want to explain to them how ConnectBooks brings in the data to QuickBooks in terms of like inventory and sales, and to make sure that they properly understand what's going on. And once, you know, that's done, it's properly on, you know, then, you know, they'll know exactly what to do.
That's great. Thank you. I think that's all of the questions in the chat, and we've gone through all of the hand raises. So thank you so much for your time. That was really informative, really grateful for you running through that and teaching us lots of things that personally I wasn't aware of. So lots of big takeaways for me, for sure. We'll make sure that this recording is uploaded along with your slides, so that the other members that weren't able to attend the live call can also watch this and have your contact details as well. So yeah, very grateful. Thank you.
Thank you so much. I appreciate it.
Awesome. Have a lovely evening.
Thank you. You too.
See you.
Thank
Bye.
you.